Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1474A, and today's date is January 17th, 2018, and the title of the episode is, The People Are Going to Be Shocked, 30% to 50% Fall in Net Worth, Dead Ahead. Let's get into the economic collapse financial news. Now, yesterday and today, they were crazy days in the crypto market, and we're seeing these huge swings from, Bitcoin going down to 10,000, then moving up again. And again, this is something that we talked about where the central bankers, they like to make other systems look volatile. This way they can create laws, and we know that Steve Mnuchin is already doing this, where he's getting together with other leaders trying to create these laws that will safeguard the people. But we know this is not what it's really about. And we know prior to 1913, the central bankers did this to the US dollar, where they made it seem so volatile that you need us, you can't manage the economy without us. And the same thing's happening now. They want people to understand that cryptocurrencies, especially Bitcoin right now, is unstable. And it looks like this is what is happening because we're seeing this huge sell-off. But what's more interesting is that online gold sales skyrocketed by 400% as the cryptocurrency market saw huge sell-offs. Now, people look to place their currency in a safe area outside of the system. And when I say outside of the system that the central bankers can control. Now, we know the stock market is completely manipulated by the central bankers. Cryptocurrencies, on the other hand, people were pouring into that because it was going up very, very quickly and people were making huge profits. Two, everyone believes that this is completely outside the system, which it really is. Even though it's not a real, currency, it was a place you can put your funds, and it was outside of the central bank's grips until you sold it off, of course. And we've said before that the central banks, what they'll try to do is they'll try to make waves here to make everyone believe that cryptocurrencies is very volatile. And people, as the downturn hit in cryptocurrencies, people took their currency, and this was happening out in Europe, not here in the United States, and they were throwing it into gold coins because the Europe's largest online dealer reported that almost 1.2 million was sold. And they're saying this was a huge surge in the sale of gold coins, about 400% or so. So we're looking at this, and we can see that we still have a ways to go here, but they're going to continually, bring the crypto market down, bring it back up with these sell-offs. They have the ability to do this, but as we notice, the crypto market always bounces back after they push their agenda. The gold market, they were able to push down with paper contracts, which they would sell on the market, and that would push the gold price down. It seems like they're doing the same thing in both areas. And when we look at this, we could see why. They're trying to make people believe that this is not a place to put your currency, just like gold is not a place to put your currency. Actually put it in the stock market. See how that just keeps going up and up and up, and we never have problems? That's what they really want. Now, we talked about the Social Security problems here in the U.S., and it looks like there are many, many problems with Social Security. Number one, the Social Security shortfall is growing 3 times faster than the U.S. economy. People turning 70 today expect to be alive when benefits are reduced. In 2016, the program lost more money than it collected. Over the course of 2016, the program's unfunded liabilities rose to $1.2 trillion. Dependency on Social Security rises with age. In fact, the original report shows that dependency rises by more than 60% between the ages of 70 and 80. And what we're seeing is we're headed into this period of time where all these programs that they set up back in the day, they're all going to end up failing, because this is all being controlled by the central banking system. And what I mean by this is when they place governments into so much debt, governments normally go to different areas to fund their programs. And they also borrow from the central bank, which continually adds to the debt. And this continually happens. Now, of course, they trade paper for paper, like, oh, we'll take from the Social Security fund and we'll just replace that with Treasury bonds. That's what Clinton did. And what we're seeing right now is that the money that was in Social Security, that's the people's money. That's not the government's money. Well, it's all the people's money, but we actually put our money into this to get our money back out of it. And it looks like they continually go into it and they continually take what they need. And this is why there's a problem. This is why they have to continually borrow to place money in there. But with the central banking system, all of these programs can't work, because when there is a dollar that is created, it is loaned to the government and they expect $1 and maybe 25 cents back. But that 25 cents doesn't exist yet. So the government has to borrow more. So think about it. The central bank is created, loans the government $1 million, and now the government owes the central bank $1.2 million. Where do they get the $200,000? Well, it's impossible because it doesn't exist yet. So they have to go back to the central bank and they have to borrow more. And then they owe more. The game doesn't work. It doesn't, well, it works well for the central bankers. It doesn't work for the people. You can't pay off all the debt. There's just not enough money out there to pay it all off because there's interest attached. And we can see right now that it is completely impossible. The system fails every single time. The only group that benefits are those that are in line with the central bank and the central bank. That's it. The people, they never make out from this, because when everything is reevaluated, when the currency dies, they lose their wealth. We see that the Fed is out there and they've come out with their beige book and they're saying there's modest wage growth, that the labor market is tightening, and all this is a bunch of nonsense because, as we know, they're not really giving us the truth. They're making stuff up, going on the manipulated data, and they're reporting on the manipulated data. So think about it. The government comes out with manipulated data. The central bank is then reporting on that manipulated data. The corporate media then spreads it across, all their platforms, and everyone's believing this manipulated data. It's one gigantic illusion. So it's really absolutely meaningless what the Fed says. Actually, look at their actions instead of what they say, because usually what they say is the opposite of what is really happening. Now, what's very interesting is China, they decided to downgrade the U.S. credit rating from A- to BBB+. Remember when S&P tried to do this right after the 2008 crisis? Well, they got slammed. They were going to be sued, and they backed off. And we can see right now that China is saying that, yeah, there are problems here. Now, they have about $1.2 trillion in U.S. treasuries, and it looks like they are selling that off right now. And the Chinese credit rating downgraded U.S. sovereign ratings from A- to BBB+ overnight, citing deficiencies in U.S. political ecology and tax cuts that directly reduce the federal government sources of debt repayment, weakening the base of the government's debt repayment. And we see right now that this credit agency was set up during the same time they were setting up everything else, because we know that everything is moving from the west to the east. And now China is calling the shots. And once again, what is Moody's going to do? What is S&P going to do? What is Fitch going to do? Because as we can see, the world is going to be looking at China, and they are now making the call saying, listen, we don't trust you anymore. Your debt, we don't believe you can repay, and we're downgrading you to BBB+. Now, we've seen this happen to other countries before, and people go, oh, it's BBB+, it's still fine. But as the debt grows, and as China decides to sell off now, because why would you want to hold it, and which they have been doing, and Russia sells off, and the rest of the countries start to sell off a little bit at a time, the rating is going to drop and drop and drop and drop, because the trust disappears. And people don't believe that they can repay this. The debt increases. The situation just gets worse and worse. Now, here's the kicker, which is very interesting. And everyone in the past said, oh, they're raising the debt ceiling. It's not that big a deal. Get rid of the debt ceiling, which means that they have this credit card that they can run up to infinity. Now, China's looking at this, and the credit rating agency is saying that because of the deterioration in the government's fiscal revenue to debt ratio to 12.1% in 2022 from 14.9% and 14.2% in 2018 and 2019 respectively, would demand frequent increases in the government's debt ceiling. The virtual solvency of the federal government would be likely to become the detonator of the next financial crisis. They're telling you they already see it happening. They know what's going to happen, just like we know what's going to happen. This cannot be sustained. Now, we need to look at Venezuela once again, because they're having a huge amount of problems. Remember, the cabal put a lot of sanctions, restrictions on Venezuela because they want regime change in this country, and the economic crisis is getting worse in Venezuela. The food shortage in Venezuela is so serious that looting has become commonplace throughout the country. In January alone, nearly 400 small protests and more than 100 instances of looting have taken place across 19 states. Now, the people of Venezuela, they're becoming impatient. They started looting supermarkets. They were waiting online, and all of a sudden they said, we can't wait anymore because we need to get the corn, we need to get the flour, and all you need is one individual to start something, and then everyone else joins in. And this is exactly what happened, because violence broke out when they were informed that only members of pro-government community councils could make purchases. And this just, everyone just went crazy after this. And we see this is what happens when there's no food, when the currency breaks down. Well, actually, there's a lot of pressure on Venezuela from the cabal. But this is what happens, and this is a scenario that we should look at to see what happens when an entire system just completely falls apart. Now, what's very interesting is that out in the Eurozone, leading economists from France and Germany on Wednesday weighed in on the politically heated debate about making the Eurozone more resilient during any future crisis. And what are they calling for? New fiscal rules and the creation of a virtual euro area safe asset that can be protected from a financial crisis. Now, this is very interesting, because the way the central bankers have been talking, and all these different countries have been talking, is that everything's great, everything's improving, they have everything under control. No, what they're really saying is they know the system's dying. When the central bankers know the system's dying, which they do, they know they're going to make a move out of the old system into a new system. They recreate everything. And this is what they're in the process of doing in Europe to work with China and Russia. And we can see that they're already pushing this agenda. Now, what we're seeing right now is that we're at this all-time high in the stock market. And people around the country, around the world, believe that everything is great. And it reminds me of 2006, 2007, with the real estate market, with the stock market, where everyone thought this was going to last forever. But what everyone didn't realize at that time was that the economy was an illusion. The subprime securities, the real estate bubbles, the stock market bubble, it was all set up to steal your wealth. And this is exactly what they did. And what we're seeing right now is we're heading into a period where people are going to lose their wealth. Now, Chris Hamilton was studying the Fed, studying debt, studying private investment, and he points out that we're headed into the same exact scenario that we've seen before. And he's predicting a fall of net worth between 30 and 50%, and it's dead ahead. Now, when we look at this, we can see that there are major, major problems. And he's saying that household net worth as a percent of disposable income has clearly exceeded any previous period. asset prices rising far in advance of income to support them. Federal debt creation year on year on a quarterly basis has decelerated by almost 75% from the 2009 peak. However, during each downturn, year on year, debt creation has doubled or tripled from the previous cycle, something to ponder as the next town is on the horizon. The federal funds rate is rising, but at snail's pace and not likely rising for much longer. This particular set of circumstances has been a losing play every time since 1981, and each rise and fall in household net worth as a percentage of disposable income has been greater than the last. He's predicting a 30 to 50% fall in net worth, which appears most likely as the next recession collapse hits. Now, most likely, this is going to be a lot worse because everything that we know of, everything that we're seeing is built on a lie on top of a lie on top of a lie. The economy is a lot worse than they're really saying. This is why we see a huge discrepancy in what the corporate media is saying, the stock market, the GDP numbers, and what is happening in the real economy with stores closing down, people losing their jobs, and we see this continually moving forward. We also see as people lose their jobs, there's going to be less tax receipts coming into the government. We see also corporate debt is a problem. Commercial real estate looks exactly like the retail real estate market prior to 2008. And when we take a look at all of this and we put all the pieces together, we're headed into a period of time which is going to be a disaster. And the Fed cannot do anything about this because just like everything else, they've been preparing to steal the wealth of the people. And what they really want is to move us to a new system because they know what else they have to do. What else can they do here? If the system breaks apart without any type of an event or anything like that, all they can do is create more currency. Does that make the situation better? No, because there's a breaking point. As they create more currency, it's not going to the people. The people are not going to feel it. It's going to the stock market. So the stock market goes up again. Who cares? It's meaningless. People realize, okay, something's wrong here because we have millions and millions of people out of work. Real estate took a dive. Commercial real estate took a dive. Manufacturing took a dive. But the market's going up and up and up and up. Corporations are closing down, just like we saw in 2008, but the market's going up. And the Fed is creating currency, which is not helpful at this time. They know it's not going to help. They're going to lower the interest rates. It's not going to help. They know they need to move the system. And this is what the main central bankers are doing. Not the cabal, not the low level. I'm talking the main central bank that is controlling all of it. They're moving it to a different area. Now, usually they do this with some type of war or event so they can distract everyone for a time period here. But we're going to have to see how this plays out. So no matter what happens here, we can see that we're headed into this period where we're going to see everyone's wealth pretty much dry up. And when we move on to a new system, well, you're going to get pennies on the dollar, and it's going to be even worse than that. How do you protect yourself? Well, in my opinion, you can either put your money in cryptocurrencies. That's one place. I wouldn't just do one thing. I would do many different things. I would buy gold and silver because that has been proven over time. Do what other countries are doing. Do what central banks are doing right now. They're ramping up on precious metals. There's a reason they're doing it. They just don't do it just to do it. There's a reason why they continually purchase more and more and more, because they understand that this is the insurance policy. Remember, the precious metal market has been manipulated, has been controlled by the central bankers. When that control evaporates and we're on a new system, gold is going to completely reprice itself, whatever the new system is going to be. Just like in the Great Depression, where one day gold was $20 an ounce. The government stepped in. They needed gold. Why? Because that was the insurance policy. They needed that to build confidence. Once they had it, they readjusted the price to $35 an ounce. Back then, that was a huge jump. And those people who traded their gold in for paper, they didn't make out. Those people who kept their gold made out very, very well. The same thing is about to happen, but this time it's going to be huge because the precious metals market has been so manipulated. It's going to be unbelievable. The cryptocurrency market is going to skyrocket like you've never seen before. And everyone needs to be ready and prepared for this because we can see we're getting more and more warnings as we get closer to it. People are starting to take notice now, and they're coming out with these warnings. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.